Robinhood Chain flips Hyperliquid in 24-hour DEX volume. Robinhood Chain overtook Hyperliquid in 24-hour decentralized exchange volume, according to DefiLlama data flagged by Cointelegraph on July 10, 2026. The flip puts the retail broker's Layer 1 ahead of one of DeFi's highest throughput venues on a daily basis, an outcome that would have read as improbable when Robinhood's chain was still an announcement. The single-day nature of the reading is the first thing to hold on to. DEX volume rankings move around constantly, and a 24-hour flip can reverse the next day. But the fact that a chain built by a stock brokerage is trading blows with Hyperliquid at all marks a change in who competes for on-chain liquidity. A daily flip, not a coronation. DefiLlama's 24-hour volume metric captures a snapshot, and snapshots are noisy. A large batch of trades, an incentive push, or a single active market can lift a chain's daily figure above a rival without signaling a durable lead. Neither the Cointelegraph post nor the underlying dashboard frames this as Hyperliquid losing its position permanently. Hyperliquid has spent the past year as one of the busiest perpetuals venues in crypto, with a purpose-built order book chain and a loyal trader base. Robinhood Chain flipping it for a day does not erase that. The honest read is that Robinhood's chain generated more DEX volume than Hyperliquid across one rolling window, and the question is whether it can do it again next week and the week after. The timing tracks with a broader climb. Days earlier, token terminal data showed ETH bridged to Robinhood Chain jumping roughly 10x in a matter of days, an early sign that capital was moving onto the network. Bridge inflows and DEX volume tend to rise together. Users move funds over, then trade them. The broker building its own rails, Robinhood, announced its Layer 1 in mid-2025 built on Arbitrum's Stack, with tokenized equities and around-the-clock trading as the flagship pitch. The strategy is to stop routing customer activity through other people's infrastructure and start settling on rails Robinhood controls, capturing the economics that come with it. The company has been stacking on-chain products at a steady pace. Recent additions include in-app DeFi lending built on Morpho and USDE, giving Robinhood's retail base a yield product running on open protocols rather than an internal ledger. Each product adds a reason to move funds onto the chain and trade there, which is exactly what a rising DEX volume figure reflects. Distribution is the asset Robinhood brings that most Layer 1s never get. Tens of millions of funded brokerage accounts sit one product decision away from on-chain exposure. When that user base interacts with tokenized stocks, lending markets, or swaps, the trading volume lands on Robinhood Chain rather than on a chain that had to bootstrap its users from zero. The liquidity race gets a retail entrant DEX volume is one of the cleaner proxies for whether a chain hosts real economic activity or just sits idle. Total value locked can be parked and forgotten. Volume means someone is actually transacting. A chain posting Hyperliquid level daily volume is hosting genuine trading, not vanity deposits. For traders and liquidity providers, a new high-volume venue changes where fees and incentives concentrate. Volume attracts market makers. Market makers tighten spreads, and tighter spreads attract more volume. If Robinhood Chain sustains this level of activity, it becomes a place where liquidity providers want to deploy, which compounds the lead. If the flip was a one-day spike, the flywheel never starts. The competitive read is also about who Robinhood is pulling activity from. Volume that lands on a broker-owned chain is volume not landing on a general-purpose Layer 2 or a rival perps venue. For everyday crypto users, the shift is another marker of a pattern already reshaping the industry. Brokerages, banks, and fintechs settling on public chains they operate rather than renting infrastructure. That same wave is pushing stablecoin spending and card products onto on-chain balances, where the funds users hold for trading and yield increasingly double as spending money. Market context: the volume story lands in a cautious tape. As of July 10, 2026, BTC trades at 63,287, up 1.7% on the day, with ETH at 1,747 and SOL at 78.31, both roughly flat over 24 hours per CoinMarketCap data. The Fear and Greed Index sits at 29, still in fear territory. Sentiment that's soft makes structural adoption stories more relevant. not less. A chain gaining DEX volume during a fearful market is drawing activity that does not depend on a price rally, which is a sturdier kind of demand than momentum chasing. Whether Robinhood Chain holds the flip past a single day is the number to watch. A daily print that repeats becomes a trend. One that reverses tomorrow was a headline.